And we are recording. Okay. Good afternoon / evening, everybody. My name is Derrick Evans. I am going to give you a PowerPoint because everyone in the military loves PowerPoints. I decided, you know what? I'm going to make a PowerPoint. That's what we decided to do. But what this is this is going to be a very condensed version of all of the most important things you need to know about the VA home loan benefit. So there's no fat in here. But like I said, we do have some bonus stuff going on first. So I'm a senior mortgage loan officer. I specialize in the VA home loan benefit. This is called How to Invest and Buy Real Estate with the VA Home Loan. It's an insider's guide to inform you how to buy, invest in real estate, use the VA benefit, buy multi-unit properties, and ultimately just maximize the opportunity. That's what it's really about. So I'm going to go in here. I got somebody to mute. There we go. I'll try to do my best to stay on top of that stuff for you. You can screenshot whatever you want, guys. Good question. Screenshot whatever you want. I will actually send you this whole PowerPoint if you want it. So there's nothing here that's being hidden or proprietary or anything like that. This is just information for you. So the bonus information is why real estate. Before we use the VA home loan benefit, it's a commitment to buy real estate. We need to know, why are we doing this? Some people are going to tell you it's not the right thing to do. Some people are going to tell you that, prices are too high, or, you shouldn't take something like that on. You need to know why you're doing it. So first and foremost, when you buy your primary residence, this is a very important point I want you to understand. It's not technically an investment. It's technically a hedge. What's a hedge? A hedge is when you fix in your costs. Everybody knows the biggest cost, the biggest bill you pay besides taxes is your housing cost, whether you're paying rent or whether you're paying a mortgage. The difference is when you get a mortgage, that payment is fixed. So you're locking in a certain payment. That's called hedging. I'm hedging in my payment at this amount. It's going to be this amount for 30 years, and then it's going to go to nothing. That's the concept behind hedging your primary residence housing expense. So it's technically a hedge. Now, hedges can make you money, just like investments can, because you have a hard asset attached to it. And a lot of people have made a lot of money with their real estate, but it is technically called a hedge. So when someone asks you, why are you buying real estate? The thing you should say to answer them is, so I'm hedging my housing expense. What are you doing? And that's the correct and savvy answer to that question. This is in San Diego, my market. But you can also see on here, we have California and we have national data. And this shows you what's happening with rents. Has anyone ever got a call from their landlord and said, hey, good news, we're lowering your rent? It's just a call that just doesn't happen. So what happens is people get calls from their landlord saying your rent's going to go up, right? And so you can see here's the trend, rent's going up. So if I were wanting to hedge, right, my housing costs, the way that I would do that is by getting a mortgage, buying a home. And instead of having my costs go up like this over time, my costs are flat. At a certain point in time, that cost of rent is going to be more than what it is that you're paying for housing. And people have noticed that happening quite a bit here in the last, what has it been? The last couple of years. So where's my mouse? Sorry, guys, my mouse disappeared. I'm flying kind of blind here. It's so bizarre. There we go. So that's what a hedge means. Okay. And then there's 3 reasons that you're going to want to own real estate. Tax advantages, especially, if you have a higher income, you're going to be itemizing your deductions. Every penny of interest that you pay in your mortgage, you get to deduct against your earned income. What that means is if you pay $20,000 a year in mortgage interest and you make $60,000 a year in income, you only pay taxes on $40,000. So that's a very big tax advantage. It allows you to make some of your money that you're making tax-free while you're paying this mortgage interest. The other portion of the payment is, of course, your taxes and your homeowner's insurance, but then principal is when you pay yourself. So in this payment I'm making for my mortgage, I'm getting tax advantages for the interest I'm paying. The principal that I'm paying, I'm really just paying myself. I'm paying down the loan. I'm putting money into my own equity. And then the other thing you have is a depreciation opportunity, the opportunity for values to go up over time. If you look at a graph of real estate values, which I believe, oh, did I not put it in here? That's my bad. If you look at the graph of real estate values over time, it just goes up, just goes up. It just looks like a 45-degree angle higher. And that's across the whole world, not just our state, our nation. Real estate goes up over time. Why? Because it's a limited supply. There's a limited supply of real estate, and we have a growing population. So just by those macro implications, we have a situation where real estate prices are going to go higher over time. So these are three things that you do not get when you rent. You get no tax advantage, you get no principal pay down, and there's no opportunity for appreciation, just rising costs. That's pretty much all it is. So when we look at why are we doing real estate, these are the reasons why. We talk about investment property. That is when you're actually getting all of these things, but you're getting someone else to pay the bill. And that is sort of the ultimate goal for a lot of people who are into real estate or who want to learn about real estate is how do I become an investor? How do I get to a point where I have, I have money coming in passively from my real estate savvy? And that is something that we'll get to today as well. And the macro implications I mentioned earlier, limited supply. And keep in mind, as time goes on, builders have already built homes in all the easy places to build homes. Okay, the rest of it's farmland. We need that. So now they're building homes in difficult places to build homes, places that are further away from cities and desirable areas. And so that there's never going to be the opportunity to build a lot of the real estate that already exists right now. It's going to be something that's further away. It's going to be something that's more expensive. And so that is, again, part of the macro implications involved here. This is an important graph to understand what's going to happen next. The average home buyer is age 33. So we always look at how many 33-year-olds are there coming online in a given year. And if you look at this year right now, you can see there are 1, 2, 3, 4, 5, 6. I lost my mouse again. I guess I can't draw anything for you guys. That's weird that they changed that. I had to download an update for this in order to launch this Zoom. It's a shame because I used to be able to draw stuff on here and you can't really do it now, but okay. So this is where we are today. This is how many 33-year-olds we have. If you back this out to 2008, it was down here at the bottom. I don't know if you can see my mouse right now or not, but right above Gen X, when that number was at the lowest point there for 4 years, that was when the real estate market crashed. Okay. That's 2008, 2009, 2010. And you can see in the years leading up to that, we had a decreasing amount of 33-year-olds. And that is a big part of where demand was not there, even though loans were very readily available during that time. Since then, the market has done what? It's gone straight up. And look what is happening with 33-year-olds. The number of them is going straight up. For the next 6 years, we will have more 33-year-olds than we have this year coming online, which means that this run in real estate, demand-wise, we can expect demand to be very strong for at least the next 5 to 6 years. A lot of people are not aware of how this works and what those macro implications are for real estate. And this is nationwide data. This is the reason why the real estate market is hot, not just in places like San Diego where I am, but it's hot everywhere. It's hot in my hometown in Missouri. It's hot in Iowa and Nebraska. It's hot everywhere. And this is the reason why, because we just have way more people who want to buy homes than we do have homes for sale. This is the last really, really insane graph that I'm going to show you. And you're going to want to keep these for sure. So you can see here before the crash, we had at our peak 3.7 million homes for sale in the country. This, which was taken actually at the end of last year regarding 2020, showed we had a current of 1.2 million. Now we actually have more like 700,000 homes. So 3 million less homes for sale now than we did before the crash, and 12 million more households. So those things right there just kind of let you know why you're seeing the market be as hot as it is, why it's likely to continue for a long period of time. And I want you to be educated on that, because when you go out and you get into a real estate market like this, It's not going to be super easy to buy a home. And there's going to be competition. And you're going to ask yourself, why am I doing this? Why am I putting myself through this? Why am I getting into competition with all these people trying to buy houses? Because there just aren't that many there are not enough houses for the amount of people that we have. That is just a reality. Here it is. I don't know why I put it here. I just put it in the wrong place. This is real estate values in the United States, median sales price of houses sold in the United States according to the Federal Reserve of St. Louis. So you can see, what does real estate do over time? Goes up. This over here, which I'm not sure if you can see my mouse or not, but this gray area here around the 2010 marker at the bottom, that is the Great Recession, the Great Real Estate Crash. When you zoom out, you see that and you go, oh, it was just like a blip on the radar. But when you're in it, it feels like, something terrible is happening. But when you zoom out, you go, wow, it was just, we needed to regress because we had gone up too much. And we're on this trajectory of higher prices. So those are 3 graphs I wanted to make sure you guys have. All right. Now let me jump in here and see if I have anything in the chat. Okay. I'm going to keep going. And at the end of each one of these sessions, I'll check the chat in case you guys have questions. Now we're going to talk about the VA loan. So I call this the VA loan pros and con. There's only one con to the VA loan. And let's get that out. So let's get that out of the way. That is, we need to admit someone here. Let me admit them. There you go. The VA funding fee. Now that's if applicable. If you have a disability rating of any amount, you do not pay the VA funding fee. So if you have a disability rating, you have access to the best home loan imaginable, possible in existence that has ever been. If you have to pay a funding fee, that's okay. That's how the whole project is funded by the VA. And there's ways to minimize that too, which I won't go into the details of that right now, but that's the only con. That's it. Now let's get to the pros. 100% loan, meaning you can buy a home and you can get 100% of the loan needed for that home finance. You're buying a house for $250,000, you can get a loan for $250,000. So the only thing that you would need to pay in that case would be closing costs, which I'll talk about here in a second. You can even get those covered too. Lower rates. The VA loan always historically has had about 0.5% lower rate than a conventional loan. Now it's almost 0.75% lower than conventional rates. So you get to borrow 100% of the purchase price and you get a much lower rate than you would if you were in a conventional setting. No money is needed to close. What that means is that you can get what's called lender credits. So should you buy a home, we're using that example, $250,000, get 100% loan for $250,000 and your closing costs are $4,000. Well, what you can do is if you qualify for, let's say, a 3% rate, you take a 3.25% rate instead, and you get lender credits for taking the higher rate that cover your closing costs. And that's how you can actually buy a house with the VA loan and not spend any money at all, which is pretty wild. There's no other loan that's even really remotely close to being able to do that. And in fact, you can, if you get enough credits, either lender credits or seller credits, you can actually buy a house with the VA loan, and whatever is left over credits can go towards one of your debts. A lot of people don't realize that either. I've done it multiple times, which is pretty crazy. But if you get into a situation where sellers are offering credits or you take extra credits, you can roll those additional credits over into a debt that you have. It could be a car loan, a credit card, whatever. So pretty wild and completely unprecedented. No other loan is even remotely close to anything that cool. Also, this ugly thing called mortgage insurance, which is something you have to pay if you have a conventional loan and you don't put 20% down minimum. You don't pay that ever with the VA loan. There's no mortgage insurance, period. Plain and simple. Zero. This helps you keep your payment lower. So not only are you getting a lower rate, but you're also not having to pay PMI, even if you do 100% loan or mortgage insurance, AKA PMI. So that keeps your payment down. It allows you to buy more home for less money monthly, which is great for ultimate investment opportunities, which we'll talk about in just a minute. Qualification is also much easier. If you have a 640 credit score, you're getting really close to top tier VA rates. For conventional loans, you need a 780 to be at the top tier. With VA, you need 640 to be right knocking on the door of top tier. And then from there, it just scales up slightly better from there, each tier of 20 points of the credit score. So the qualification is easier. Credit score is key. It is important, but you don't have to have a perfect credit score to get a great rate. There isn't that huge jump from credit tier to credit tier with regards to the rate. So the whole program is designed to help make buying a home easy, affordable, and for everyone who is entitled to it. You can have more than one VA loan. And in fact, I did a second tier VA loan pre-approval today. And they had bought a home in Virginia, and they're coming here to San Diego. When you have a situation like that, here's what you do. I create this document for you, and it'll show you how much entitlement you've used. It'll show you how much you have available. We pull your certificate of eligibility through the VA portal directly. We get this information, and then you'll have what's called here the max zero down price. That'll show you, based on the county you want to purchase in, if you don't want to put any money down, here's the maximum amount that you can borrow. Now, if you want to go above that, then you have to put down 25% of the difference. So for example, if you wanted to buy $100,000 above your max zero down price, then you would have to put down 25% of the difference, or $25,000 in that case. So you can go above that for second tier VA loans if you have the money to put down. If not, then you want to stay at that zero down price, or we need to refinance the current loan out of the VA or sell that property to clear up the VA entitlement. But you do have options, and it's always worth exploring these, because if you can keep the VA loan on a property that's going to be an investment property, you'll probably make more money doing that. Okay, before we go to the Earl, let me check the chat here. You can have, good question. So you can have as many VA loans as you have entitlement for. The most I've ever seen is 4, but essentially, as long as you have any $1 of entitlement remaining, you can still get a VA loan. So it's really up to how much you've used. So when you buy in a high cost area like San Diego, it's very difficult to do a second tier loan because there's not much entitlement remaining. When you buy in Florida, or one of the places that has, I don't know, does Florida still have cheap homes? Does anywhere still have cheap homes? There's places where you used to be able to buy homes for 100, 150 grand, 200 grand. You buy one of those homes, you're not using a lot of entitlement. When you buy $700,000 or $800,000 house in San Diego, you're using a lot of entitlement. So you just won't have as much remaining. But that's a great question. Okay. With mortgage insurance, I was told it was like gap insurance for a vehicle. What happens if you die prior to paying off mortgage? Does it go to your beneficiary? They owe to pay it, or does it continue for them? So good question. So for mortgage insurance is only for the lender. So when I do a conventional loan for someone who's putting down 5%, let's say, and they're paying PMI, all it does is it insures the bank in case they default. It insures up to 20% of the equity. So they're assuming they're going to be able to fire sell the home for 80% of its value, and the mortgage insurance covers 20% of it, and that should make them whole. But it does nothing for you. Mortgage insurance does literally nothing for you at all. You can get certain types of insurance that are helpful for you. They're sort of like life insurance, death benefit type things that will, like Aflac is for one if you get hurt. There's other things like that if you pass. You can get all kinds of insurance, but mortgage insurance does nothing for you. Maximum dollar entitlement assigned to each borrower. That's a good question. I'm not actually sure what the maximum dollar entitlement assigned to each person is, but each person who has full entitlement, meaning they don't have any VA loans outstanding right now, will be able to use that to buy as much as they want. So one of the things that VA did in 2020 with the Navy Blue Water Act of 2020 is that they removed the loan limit for people who have full entitlement. So if you have full entitlement, you don't have any VA loans out there, you can get a VA loan for as much as you qualify for. So we've done $2 million VA loans. I know someone who did a $6 million VA loan. So as long as you income qualify, you can get a loan for it. So really, the maximum dollar amount that you can borrow, especially when you're buying your first home with the VA loan, is totally based on just what you can qualify for with your income. You start a business as an LLC, can you use the VA loan to purchase a home under that LLC? That you can't do. So the VA loan is always a primary residence loan, meaning you're buying it for yourself to live in. And I'll tell you more about that and the specifics of that in a second. But yeah, it's not something you can use from a business perspective. Do you receive your full entitlement back after selling your home for future use again? You do. Yes. And it's a good idea to always follow up on that and make sure. that your certificate of eligibility has been restored, after you sell our home. It's just a good idea to follow up and make sure that happened. Good questions, guys. Okay. Let's talk about the magic EARL. What does EARL mean? Well, technically it means the interest rate reduction refinance loan. That's a lot. So I just say, hey, your Uncle Earl wants to save you money. That's how you remember it. Uncle Earl is there. He's there to help you save money. It's basically just a refinance. When you have a VA loan, you can refinance it very, very easily. What is a refinance? Well, if you bought your home, a few years ago and you got a 3.5% interest rate, but just a couple months ago, interest rates were in the low twos, you would want to refinance to that lower interest rate. What do you have to do that? Well, you have to go through the same paperwork you did to get a loan in most cases, but not with the VA loan. This is so much easier. You don't need any appraisal. You don't need any termite inspections. You don't need any income documents. You don't even have to have a job technically. You don't have to live in the property anymore. It can be an investment property. Occupancy, I shouldn't say occupancy doesn't matter, but it doesn't disqualify you. So you can do this very, very easily. You pretty much just confirm that you are who you say you are, and you can refinance to the lower rate, which is so awesome and so helpful to not have to do any of those things. Credit score is the key with the EARL. When you're doing a VA refi, that's going to really dictate what your rate is going to look like. The loan amount does to some extent, but it doesn't have the same impact that the credit score does. So credit score is the main key when you do this. And so it's a good idea if you're thinking about doing an EARL, or if rates are lower and you're eligible for the EARL, because you have to wait 210 days. Let's say it's 60 days out, you're going to be eligible. That's a good time to look at your credit and see how you can boost it up, because you're going to use your credit score to help get the lowest rate possible. So this EARL, this is a streamlined refinance program that exists solely through VA. There's nothing like this for conventional. FHA has a streamlined program. It's garbage in comparison. This is another huge advantage to being able to have the VA loan. If you go and you buy today and rates are in the low threes, let's say 3.25, and rates drop, a year from now, you can take advantage of it very quickly, very easily, with very little paperwork. And that's just a really nice bonus to be able to have. So if you don't hit the rate perfect when you buy your home, that's okay. If rates improve, you'll be able to easily refi. If rates go up, good thing you got locked in. So it's kind of a no-lose situation. Okay, let's take a look at the chat here before I move on. Can you convert a VA loan into a conventional loan? If so, what are the repercussions? You can. Well, what you do is when you have a VA loan that you want to free up, you either sell the property or you can refinance it to a non-VA loan. Typically, we would refinance the VA loan to a conventional loan. That would free up your entitlement and allow you to go ahead and use the VA loan again. So there's no repercussions for it. It's just, you're just doing it to free up your entitlement, and that won't hurt you in any way. Good question. Okay, house hacking. This is a new thing, but everyone seems to be catching on to this, and I'm so happy about this because we've been talking about this for years. So for people who are buying a home to live in, but you're renting out the rooms, essentially, right? So, and there's people who have made, in fact, I interviewed someone on my show one time who she was, I think she did it while she was active as well. She would rent out her rooms, and she would actually Airbnb some of her individual rooms from her house, and she made a killing doing it. You can rent out the rooms. You don't have to Airbnb them. You rent out the rooms to people who or whatever, and you can basically get paid to live in the home that you own. So this is where you would buy a home that's like a 4 or 5 bedroom, rent out the rooms. Rents are so high right now. People are renting out rooms for $1,200, $1,500 here in San Diego. It's pretty wild, but you can't get a 1-bedroom apartment for that. So it's a good deal for everybody. So that's house hacking. This is something that you can absolutely do with the VA loan. And you can absolutely use the income that you make from renting out these rooms to qualify for future refinances and so forth. We just have to show the 2-year history of it. So you need a 2-year history of it, and you can use that income, which is pretty wild. But just getting paid to live in the home that you own and that you get all the tax benefits for is also pretty freaking awesome. Let's see. Okay. So that was just a quick kind of FYI. Yeah. Airbnb. Good question. I see you there. Yep. You can definitely Airbnb. You can Airbnb the property when you're not there. You can like what they call instant hotel. You're going to be gone for the month of December. You can Airbnb at that whole time. You can Airbnb individual rooms, in the home as well through Airbnb and VRBO. So yeah, you can do all that. No restrictions at all. Good questions. Let's talk about buying multi-unit. This is something that has been pretty hot lately, and I don't think that's going away for people who really want to build real estate portfolios using the VA home loan benefit, which there's no better way to do it. This is a hot question. So you can buy up to a 4-unit property with the VA home loan. 4-unit property. Now, everyone always asks me, do I have to live in it? Yeah, you have to put, it has to be your primary residence. But, essentially, what does that mean? Is someone going to come knock on the door with a badge and say, hey, show me your ID. We're the VA loan police. No, that's not going to happen. So what's going to happen? Well, at closing, you are going to sign a document. It's called an occupancy affidavit. And it says in that document that you declare that you intend to occupy the property as your primary residence for at least 1 year. So keywords there, and I'm not an attorney, but keywords are intend to occupy. I have had attorneys look at this. Intend to occupy. Well, your intentions can change, right? So I'll let you do with that what you want, but it does need to be your primary residence, and you do need to sign a document that says you intend to occupy it. So those are 2 things that will happen, but there are no VA loan police that will come knocking on your door. And you can use rental income. So this is where it gets really good. When you're buying a multi-unit, you can use rental income to qualify, but you have to have some reserves. So if the payment on this, let's say you're buying a 4-unit property and there's 3 units that rent out for $1,500 and you're going to live in the 4th unit. So you got $4,500 of rental income, but it's more expensive property than what you qualify for. So you need that $4,500 a month in rental income to qualify. If you do, you can use it, but you have to have what's called 6 months of PITI. So if your monthly payment is $5,000 a month, then you have to have $30,000 in savings in liquid assets after you close on the home. And so that's something that the VA underwriters will keep an eye on. Now, if you don't need that income to qualify, in other words, if you're able to qualify for the whole thing on your own without it, then you won't have that reserve requirement. That's the only time the VA loan has a reserve requirement, is if you're using the potential rental income to qualify. Now, there are some lenders that will tell you that if you have an ADU or something like that, or a garage that you converted, that you can't use that income. That's not true. You definitely can. You just need to document it. That's all. Just document it for 1 year, and then you can use it. If it's the case that you're buying a place that has a unit like that already, then what you can do is, if they've got documentation, you can use their documentation to show that you will be making that money when you own the property, and you can use that to qualify. So there are multiple ways to use these different units and opportunities to help bolster your approval. A lot of times people in this market here in San Diego, they'll be approved for 600,000 or 700,000. But when they start looking at rentals, you can buy something that's 1 or 1.2, because you're going to have rental income that you can use as part of your qualification. So it changes what options you have in the marketplace, which is pretty cool. And then, of course, you buy one of these, put a VA loan on it. I have a veteran in Oakland who bought a 4-unit that is going to literally set him for life. He's making so much money on it. It's crazy. But the rents are skyrocketed up there, and he got a really good deal on a place kind of right before things took off. I mean, he is set with that 4-unit, and he's just going to leave that VA loan on there. No intentions to refi. He's got a great loan, no mortgage insurance, low rate, fixed. If he buys another property, he'll just do a conventional loan. He's just going to leave that VA right on there. So that's a good way to ultimately, if you're trying to build passive income, is keeping that VA loan on there. If you want to build more units, though, you got to free it up. It's the easiest way to go. People will tell you, hey, the loan limit's $2 million. It's not true. You can qualify for however much you qualify for. Also, there's one thing too on here that might be really good in some of these other markets, the VA renovation loan. Now, that's only up to 2 units. So you can't do 4 units on that one. But the VA renovation loan allows you to renovate a property. What does that mean? That means you're updating floors, you're updating kitchens, you're updating paint, stuff like that. It doesn't mean that you're knocking down walls and, doing major construction and reconfiguration of the home. It means you're literally just renovating, you're updating it. Call it an updating loan. You can add things like a fence and stuff like that, but you can't add a pool. You can't add square footage. So it's somewhat limited, but for some of these homes that maybe need some love, if you have a seller that's willing to go through the process, it takes 90 to 120 days to do one of these deals, but especially if you're buying a home from someone or a neighbor or someone who's just patient, not in a hurry, you can use the VA renovation loan to fix it up within the same loan that you're using for your permanent loan. So that one's complicated a little bit. I won't go into it too much, but I just want you to be aware that it exists in case you come across a situation like that. No, there is a VA product that can help. Okay, and I believe that is the end of this one. So let me jump up to the chat here. This might be a taboo question, but can you use a VA loan to build a real estate portfolio or flip houses? That's nothing taboo about that. Yeah. In fact, I know a lot of people who are building real estate portfolios with the VA loan. Basically, while you're, active, everywhere you go, buy a house. Before you leave, refinance it to conventional, free up your VA, go to the next place, buy a house. Everyone I know who's done that, who has 6 or 7 or 8 houses, is absolutely crushing it. So yeah, I would say use it to build a real estate portfolio. Flipping houses is a little bit more difficult because typically when you're flipping a house, it's a house that's kind of run down or it's in bad condition. When you buy a home with the VA loan, the VA does not want the veteran in to get a lemon. They want to make sure that the home is good working order, everything. In fact, if they don't have doorknobs on a door, the appraiser is going to call that out and say the VA is going to want a doorknob on that door. They want to make sure the home is complete, that it's safe. So any health or safety issues are going to be called out. They're not going to allow you to buy something that's kind of a junker. And for the most part, when people who are flipping houses, they want to buy junkers. They want it to be the ugliest thing possible. So that's the only reason that they don't really marry up together. But you totally could do that. If you had a house that was just dated, everything works, but it's just old and you wanted to completely renovate it, you could get a VA loan on it. So hopefully that answers your question. Good question. Okay. Leverage opportunity. This is totally unheard of. I have a veteran just got out. Actually, he's going to do 100% cash out on a property that he bought 2 years ago for $800,000 and just appraised for 1.3. So he's going to end up, after he spent $100,000 fixing the place up, he added a unit. It was a 2-unit. He added a 3rd unit. He's going to walk away with $400,000, and he's going to go buy some stuff free and clear out of state. And he's already cash flowing, even though he's living in one of the units. It's crazy. So 100% cash out. What does that mean? That means that when you own a home and you have the access to the VA loan, you can borrow 100% of the value of that home. So if you buy a place for $200,000 and then a few years later it's worth $300,000, you can go and get a new VA loan. You can do a VA refinance for $300,000 to pay off the $200,000 or whatever is remaining on your current loan, and you can get the rest as cash out. Why is that such a big deal? Well, equity's great, but it also just sits there, and your home is going to go up or down in value regardless of what you owe on it. So a lot of people who are investors don't like the idea of, well, I have $200,000 in equity, which is sitting there earning me 0%. It's doing nothing for me. I want to get it out. I want to put it to work. I want to buy a property. I want to invest it in this or that. I want to start a business, whatever. I want to build an ADU. I want to build another unit on my property. Or I want to buy a house for cash somewhere else. You have the opportunity to do 100% cash out. This is such a big deal because, again, there's no mortgage insurance. And if you're doing a conventional loan, the maximum cash out is 80%. So you're able to really take advantage of your equity, take it, and you can do with it what you want. You don't have to take 100%. You can take 90%. You can take 80%. You can do whatever you want, but up to 100%. So you're in control of your equity. I can't tell you how huge that is, because one thing we know about homes is that they go up in value over time. So what are you going to do with your equity? If you don't do anything with it, that's fine. But if you want to, it's nice to know you have an option to do something with all of it, not just a portion of it. You can diversify your investments, buy other stuff, buy more property, consolidate debts, A lot of people will do that too. And then one of the nice things is you can EARL, again, 210 days later. If you take a higher rate, rates go down, you can just EARL the cash out loan again and save however much that saves you. So the leverage opportunity with the VA home loan benefit is massive. It just gives you the ability to buy time. So it saves you time. And time is one of the things that is probably the most valuable asset that we all have. So if you can skip forward in time without actually costing you days, that's huge. You should always do it anytime you can. And you can do that with the VA home loan. So cool. There's no other program like this, not even close. Let me see if I have questions here before I get to our reminders. Can you use a VA loan for new builds, raw land, and new construction? You can. I have 3 people right now who are in contract on new builds, new construction homes with the VA loan. Let's see here. Raw land. Yeah, raw land is tough for construction, just in general, because there's a lot that goes into that. But there are VA construction loans that you can do, and you can do them on raw land. It's a very complicated process. I wouldn't put it this way. As nice as it sounds to say, I'm going to keep it very real with you. It's a nightmare. I would if I really didn't like someone, I would send them off to do that. Here, go try to build a raw, if I really, really didn't like somebody, that's what I would tell them to go do. Cause is it a process. But if you're into construction, or if you like that stuff and you know how that stuff works and it doesn't bother you one bit and you have all the time in the world, then, the VA construction loan is something you could look into. Son just joined the Navy. This is his 3rd month in. How early can he use his VA loan, or when can he start this process? So, there's qualifications for when you become eligible for a VA loan. And a little bit of it depends on how long you're on active duty. It's a little bit of it depends on, whether we're in a wartime, quote unquote. But essentially, if you are active and you have over 180 days, so usually you need 6 months in, then you're going to be okay. If we're calling this wartime, and this is based on your statement of service, but if we're calling this wartime, 90 days is all you need. So it's quite possible after 90 days that he would have his eligibility. This is something that you can pull from the VA online, or you can call the VA and just ask them. And that would be probably the smartest thing to do. Just have them call the VA and just ask them, hey, is my COE ready yet? And if not, when will it be? So you can use it pretty quickly. That's definitely something I would recommend. The younger, the better. The younger you can start buying real estate, the better, because it's just a game of time. You don't have to be smart. You don't have to be savvy. You don't have to study it, stare at charts. You don't have to figure anything out. All you have to do is just have the stones to pull the trigger and to do it. And that's it. And wait. And you'll win with real estate. Great questions, guys. You guys have been awesome. So I'm gonna give you some reminders here, and then we'll hit the chat for as long as you guys want. Okay. First on the reminder list, the 3 things you get when you own a home, you do not get when you rent: principal pay down, appreciation, the opportunity for that, tax advantages. Remember those things. Those are 3 huge things you get exactly 0 from when you rent. Teach this to your kids. They really need to know this. And they're all 3 really, really big. There is no better home loan available to buy real estate with than the VA home loan benefit. I'll debate that with anybody, anytime, anywhere. It's no brainer, 100%. There's not a second, a close second. So I know you may have heard, oh, well, Dave Ramsey said this, Dave Ramsey said that. Dave Ramsey has no idea what he's talking about when it comes to this. He might be a great guy to help you get your debts paid off, but when it comes to mortgages, trust me, he doesn't know what he's talking about. I've seen a lot of home loans. I've helped thousands of people get home loans, and this is as good as it gets. Always have an entry strategy, have an exit strategy before you pull the trigger. So when we're looking at real estate, especially, hey, we're active. All right, we might get, orders in the next 2-3 years. Well, what happens when that takes place? Are we going to sell the place? Are we going to rent it out? You need to know what both those options look like. What would this place rent for if we rented it today? Keep an eye on that. Keep an eye on the rental market when you own property in an area. It'll tell you a lot about what's going on with that property. When you're, and part of your entry strategy might be, hey, we want to go over to this area of town because the schools aren't that great over here, but we know that by the way, every city, every municipality, their construction plans for the next 10 to 15 years are all public record. So if you want to learn what areas of town are going to blow up, all you have to do is go ask for those records. How much money are you guys spending on this over there? Oh, I heard you're revitalizing that area. How much money is going into that? How much money are the schools getting? Because schools that are bad will get better over time, especially as real estate values go up, because that's how they get funded. So that may be part of your entry strategy. So entry strategy, exit strategy. This should be something you discuss with your agent. This should be something that you discuss with your lender. Let me jump to the chat here. What would be my first step to find out my maximum entitlement? So be pulling your certificate of eligibility. Pull your certificate of eligibility. If you haven't used a VA loan, then you should have all of your entitlement. In which case, then it would just be a matter of how much loan do you qualify for. And your loan qualifications for the VA are not like conventional. Conventional, it's just a very simple, you look at your debts, you look at your income, you have a debt to income ratio that you can't max out. With VA, there is no debt to income ratio. It just doesn't exist. It's called the residual income calculation, which is also known as the VA residual income calculation. It's just for the VA, and you use that to qualify yourself. So the maximum you would qualify for to buy a home will be in portion based on your entitlement being there, but it's going to be more based on your income versus how much debts you have and how much net income you have available at the end of the month. So if you want to find out how much you could purchase, then you would need to get pre-approved by a lender, a VA lender, in order to figure that out. Hope that answers your question. Do some sellers give a hard time to VA loan inspection? They do. There are some sellers that don't want to take a VA loan because they're communists or whatever. Who knows? I don't know. That's a soft subject for me. I fight that fight every day. So yeah, some sellers, have no respect. And some sellers are just selfish and they won't even entertain a VA offer. It happens, it does. It happens. And sometimes it's the, dinosaur realtor who's advising them that's telling them these things. So, that's where your lender and your realtor really need to fight for you. And there's a lot of things you can do. Okay. If you're running into this in your market, if this is happening to you, like if you're pre-approved already and you're trying to get an offer accepted and it's not working, my suggestion is to ask your lender to have your loan fully underwritten. So not just pre-approved, but have your loan fully underwritten so you can take your underwriting approval and you can show that to the seller. Look, we're already approved for the loan. This isn't just we're not speculating here. We've got an approval from an underwriter in hand. Here it is. So if you're running into that, have your loan officer do that and you'll see your results will come. How does the VA loan benefit look attractive from the loan company's perspective? From a loan company's perspective, it's attractive because there's not really any risk. So the VA, they cover 25%. They insure 25% of the loan. So if the VA does what's a good round number? A $400,000 VA home loan with a bank, the VA is guaranteeing 25% of that, or $100,000. So worst case scenario, this person disappears, doesn't pay their loan back, whatever. The bank will be able to get $100,000 from the VA, up to $100,000 from the VA to make themselves whole. So if they fire sell the property for $300,000, they're still going to be whole. So it's about limiting losses. And also the VA home loan has the lowest default rate of all of other loans. And there isn't a close second there either. By far the lowest default rate. And part of that is because I think there's probably a higher level of discipline in general with people who are eligible for VA, but also because there's entitlements attached to it, right? If you screw it up and you leave the VA hanging, they're going to remember that and they're going to catch up with you on that at some point. So, if you want to use it again, that is. If you just say screw it and never use it again, then you may not have that confrontation. But so I think there's a little something there that everyone knows is kind of in play, but that's how it looks attractive to a bank. If I purchase a home and have to leave, is it best to have a real estate company manage that property? I sure would. I think it's worth the 8%. For my investment properties, I don't manage them. I don't want to take those calls. I don't want to deal with that. Do you pay for that a little bit? Yeah. Yeah. But that's why you want to have that in mind when you're building your exit strategy. If your exit strategy is going to be to keep the home, should you get PCS, then you're going to want to look at, okay, well, how much is rent? How much is a property manager going to cost? What is my net going to be? How much is this going to impact me? So I would definitely recommend a professional property management company, though, and get one. Don't get one like off Yelp. Don't get one that's paying for an ad. Talk to realtors, ask around, see who knows of a good company, good reputable company, and try to get a referral. Are there any differences using your VA loan the second time? No. The only difference might be if you pay a VA funding fee. When you are doing your initial or your first time use, you pay a smaller VA funding fee than when it's a subsequent use. You can eliminate that, though, by putting down payment. So if you put a 5% down payment, you'll actually pay a lower funding fee than you even did your first time. So there are different ways to kind of affect that, but that's the only thing. Then nothing else is affected. Is there a better lender to go through? I'm super biased on this for myself, obviously, because it's what I do, but there's some lenders I would avoid. Usually it's the bigger ones. The bigger lenders have a lot of expenses, right? They're everywhere. You see them, you recognize them. They have more costs, and it shows up in their rates and their fees. There are certain like banks that are like great banks, like Navy Federal, USA. These are great banks, and sometimes I hear people say they had a good experience buying homes with their financing, but most of the time that's not what I hear. Most of the time it's really, really bad. So same thing. I would just try to get a referral to someone who's local. Try to work with a mortgage broker. A mortgage broker has access to lots of different opportunities in the rate space. So, and I'll even show you guys that here in a second if you want to see it. But when I go to look for rates as a broker, I have dozens of different banks that are giving me their rates for the scenario that I put in, and I can pick the one that's the lowest. Same thing with insurance, homeowners insurance. Get a homeowners insurance broker. They do the same thing. They have the same type of program where they can pull up all the different carriers and see who's the best given your circumstance. See, when you work for a bank, you're just married to their rate sheet. Whatever they're doing that day, you're stuck with that. When you're a broker, you have the ability to go to whoever's trying to actually be competitive. Whoever wants that business today is who's going to get it. And so it's a more advantageous position to be in. So mortgage broker, look for a local mortgage broker. My ex-spouse and I, dual military veterans, bought a house 7 years ago, then divorced 2 years ago. Whose VA entitlement was used? Would it have been both of us or one of us? It could be either one. Good question. When you have dual entitlements where you both have entitlement, you can either split it or you can put it all on one or the other. It's wiser now with the way the rules are to just put it all on one or the other. Cassandra, the way that you can figure that out is by pulling your COE. So pull your certificate of eligibility, and with the VA or with your local lender, they can pull it for you as well. They should have access to the VA portal. And see if it's showing up on your entitlement. If it's not showing up on your entitlement at all, then you used his. If it's showing up a little bit on your entitlement, then you probably split it. And if it's showing up as a lot, then it's probably just in yours. So hopefully that's helpful. But I guess you're keeping the house, so you could just refinance it too, but you probably have a great deal on it. But that is something to figure out. You're going to want to know because let's say, for example, the house is yours now, but it's in his entitlement. One day he's going to come knocking, right? Going, hey, I need my entitlement. And you're going to be, there's going to be a situation there that's not going to be comfortable. So you don't want that to come up out of nowhere one day. Be a good idea to get ahead of that. Any suggestions on looking for a realtor who can help me buy a multifamily home? It just depends on the market you're in. It's a great question. If you, like I said, you can email me. Let me put this up actually. Okay, I had a few other questions here. There's my contact information. So you can call me, you can email me, you can text me, whatever you want to do anytime. If you're in a market that I don't know, then I'll just kind of tell you like, hey, I'm not sure. But if you are in a market that I know, which is a lot of markets, not all of them, then I can recommend somebody for you. But yeah, your realtor is super, super important. Super, super important. There are a lot of posers out there. There's a lot of fakers. There's a lot of talkers. A really strong buyer's agent is going to be very, very important for you to win in this market. So I would be very selective about my realtor, and I'd be very selective about my loan officer. In fact, here's the questions I would ask them if you're looking to buy a house. I would ask the realtor, how are you going to help us get our offer accepted? If they stumble on that, that's not your person, because that should be tip of the tongue. They should be ready to go, oh, here's what I do. They've already got their system in place. They already have it. They know what they need to do. If they go, oh, well, we try to, talk you up, and, we talk ourselves up, and we're the number one brokerage about. No, that's not going to do it. They should really, really know. They should know exactly what they're going to do with regard to this. Mortgage lender, same thing. How are you going to help me get the best mortgage rate? Just ask that question. How are you going to help me do that? It's a very reasonable question to ask. And they should have a very good answer for that. If they don't, look for someone else. Also, another question to ask your lender: how are you going to help me get my offer accepted? What do you do when the agent writes an offer on my behalf? What are your action items? If they don't have answers for these, they're not your people. They should darn well have answers, and they better be good ones. When getting a house, what if your only income is VA disability? You can do that. Totally. VA disability is tax-free, so you get to gross it up. So let's say you get $2,000 a month in VA disability. You actually get to qualify with $2,500 a month because you can gross it up 25%. So you can buy a little bit more for the income you're receiving than if you were just getting paid that gross through like a job. Let's see here. Only income. Yeah. So your only income being disability does not deter you in any way. You can use the whole thing and for qualifying purposes. But if that is your only income, then you'll be limited just to what you can qualify for with that income. So ideally, if you're going to buy a house and you just have a disability, you would want to have your other debts completely paid off. That'll help you a lot in being able to qualify for more. Nice, Rodney. I appreciate it. Thank you, man. Glad to hear it's helpful. Liz, what did you want me to say again? Let me know and I'll do my best. And we are recording this, and Antonio is going to send a recording out. So keep that in mind. On the COE, the basic entitlement is the max that you can borrow. No, the entitlement is how much the VA is willing to cover for you, basically. So remember we said the VA, they cover 25% of whatever it is you're borrowing. So that entitlement amount is essentially that 25%, how much of that 25% they're willing to cover. However, now there's no limit. There's no limit anymore on that if you have full entitlement. So even though you may only have, let's say, $100,000 and you're buying an $800,000 house, the VA will cover that full amount, if you qualify for it. So on the COE, the basic entitlement is how much the VA is willing to cover for you out of the 25%. Does not matter if you're a first-time buyer whatsoever. Nope. Makes no difference other than if you're paying a funding fee, you'll pay a lower funding fee the first time with the VA. What is the average loan term for VA loans? Yep, 30 years usually. Yeah, very few people will do lower than. I did a 20-year VA loan here recently. Let's see here. Thank you. You're welcome. Okay, let's hear from Antonio here from WWP. Ladies and gentlemen, I have to head out to my son's basketball practice. Derrick, thank you for taking the time out of your evening to inform our warriors on the VA home loan. I will certainly be in touch, good sir. If anyone of you have any questions or comments, feel free to reach out to me via email and I'll respond. I look forward to seeing you all at future events. Thank you so much for putting this together, sir. Really, really appreciate you. Okay. Thanks, Liz. She got it. Thank you very much, Derrick. You know your stuff. Excellent presenter. Thank you, Chris. Appreciate that. What's the timeline for applying for the loan to final purchase? So your pre-approval should be good for 90 to 120 days. So you don't want to get pre-approved until you're at least 90 days or closer to purchasing. Once you start looking and you actually get into contract, then it's 3 to 4 weeks usually before you're closing. But right now, the market is so seller driven, it's really whatever the seller wants. So if the seller wants to, stay in the home for 60 days, then you're doing a 60-day escrow. You pretty much have to do whatever the seller wants. But most of the times it's 3 to 4 weeks after you get an offer accepted. Took 30 days to close on our first home. We were told that is typical. Is there a way to close faster? Can you waive inspection on a new build? You can, so you can close faster. We're closing one in 17 days. It's going to close on Monday. It's clear to close today. So easily going to close on Monday, 17 days. So you can definitely close faster. You can waive an inspection anytime. By the way, there's no inspection required for the VA loan. You have to have a termite report completed and a termite clearance completed. You have to have an appraisal report completed, but the inspection of the home is just for you. And let me tell you, Linda, never, ever, ever waive it, especially on a new build. New builds, don't give them that much credit. We have seen some of the most patchwork. Remember, there's been a lumber shortage for a long time. We've seen some of the craziest patchwork stuff imaginable on new builds. Definitely get an inspection. And I went to buy a home one time that was a one owner home, and I didn't buy it because of the inspection. And the inspector got in the attic and he goes, "Holy shit!" I was like, "What? What's going on?" He goes, "There's no insulation in here." Now, this is in Missouri. I'm from Missouri, where I buy my properties. There was no insulation in the house. So when they bought it brand new, 11 years before that, the insulation guy didn't show up. And so in the middle of Missouri, they were dealing with no insulation in this home. The home had just had so many more miles on it as a result. Long story short, always get an inspection. Thanks in advance. Thank you. On the COE, does the entitlement code matter? No, just the amount. What is the requirements of manufactured homes? So for manufactured homes, they just need to be permanently fixed to the ground. Okay, so they have to be on a permanent foundation, and they need to be on owned land. So it can't be on leased land. It has to be land that's owned, and it has to be permanently fixed to the ground. Can't be mobile anymore. How do you optimize a VA loan in this market where many homes are sold on a cash basis? Best way to do that is to get your underwriting approval. So don't just get a pre-approval letter, get an underwriting approval and tell your loan officer, I want an underwriting approval, not a pre-approval, because that is how you show the listing agents that you're serious, that this isn't someone's quick guesswork, that this has been reviewed and has been approved. I'm excited. You're welcome, Liz. Thank you. Might be competing against investors. It's true. Investors are tough to beat, but remember, investors always want to buy really low. They want to buy well below market value. So if you're a buyer who's at market value, then you do offer more benefit to the seller. So keep that in mind. Yeah. Okay. Well, awesome. Guys, thanks for joining today. I really appreciate it. This is my contact information here on the screen. If you want to reach out to me, you can email me anytime, call, text me, whatever. I'm happy to help. Appreciate your service to this country, which I love dearly. And I'll do anything that I can to help any one of you anytime. I'm going to end the recording. And then I also, if you want to email me, I can send you this deck. So all these slides, I can send it to you in PDF. I can send it to you in PPT, whatever you want. Just email me, say, hey, I'd like to get a copy of the presentation in PowerPoint, or I'd like to get a copy of the presentation in PDF. And I will definitely get it out to you shortly thereafter. So anything I can do to help you, just let me know. Everybody have an awesome night, and we will see y'all soon. Take care.